What's good, everybody? It's your boy Vanquish33, your favorite petty bro with a whole lot of ambition. Fana push up, push up, machine, we vuga and go get it with no permission, baby. And I'm back again with another YouTube video, guys. So in today's video, it's just gonna be a short video. I don't want it to be too long because I know a lot of you are not gonna make it to the end of the video. So today's video, we're basically gonna be talking about what Forex trading is, right? So I mean, it's common knowledge that Forex stands for foreign exchange, right? I feel like most of us trade the financial markets without actually understanding what we are trading within, right? So Forex is basically a market where buyers and sellers actually interact, right? So the Forex market is made up of huge financial institutions such as your banks and other participants as well, right? So what happens is basically these huge financial institutions trade on an electronic platform called the interbank market, right? So this allows financial institutions to actually place their trades, right? So they actually place their trades, and if their trades are actually matched, then the trades get absorbed by the market. But if those trades are not actually absorbed or matched, they actually have the option to actually cancel those orders they have placed, right? So these people actually are able to place their trades on an electronic brokering system, right? So it's banks such as Deutsche Bank, is it HBC or HSBC, those kind of banks, right? These big institutions who actually have a lot of money, right? So these financial institutions branch out to corporations, hedge funds, as well as brokerage firms, right? So all these financial institutions actually are actually managing the wealth of their clients and actually put risk management procedures in place, right? So we have commercial banks, we have brokerage firms, we have insurance companies, and all sorts of things of that nature, right? So us as retail traders are able to trade the financial market due to us, the brokerage firms, right? They create a platform for us to be able to trade the financial market, such as we're able to trade currencies, we're able to trade gold, and all sorts of things of that nature, right? So us as retail traders, unfortunately, we don't have access to information, we don't have access to the right technology, we don't have access to the necessary capital, right? And we don't have the manpower, right? These huge institutions have a lot of money, so they're able to employ people such as quants, people who actually code the systems that they use to trade. They're able to use psychologists as well as actual scientists, right? So us as retail traders are at a huge disadvantage within the financial market because we're also trading at the worst price possible, right? When we use brokerage firms, like if you use a certain broker, right? I'm using FBK Markets right now, so right, and they have a certain spread, right? So when I'm actually executing a trade, right, I'm getting the most expensive price because of the difference between the bid and the ask price, right? So yeah, jumping back into what Forex actually is, right? When we trade Forex, we're trading derivatives, right? And a derivative is what can I say? It's not an actual product. So when you're trading gold, you're not actually trading the physical asset, right? Or you're not trading the product. Unlike Bitcoin, right? If you trade on Binance and you buy a Bitcoin, it's a digital currency. Yeah, right? You get the drift. They're different kind of derivatives. We have futures, we have options, and we have swaps, right? And in Forex trading, we're basically trading futures, right? Correct me if I'm wrong, right? Futures, and we're trading CFDs, right? A contract for difference, right? So basically, when you place a trade, right, you basically getting into an agreement or a contract, right? Derivatives drive it's a contract that derives its value from the change in the price of the underlying asset. So you're not actually buying or selling the actual product. You're basically betting, right? You're placing a bet in a bet, right? So you're basically going into an agreement with the broker that if I execute an entry and the price goes into my anticipated direction, the broker will compensate you for being right. And when you're wrong, you'll actually get penalized, and a certain amount of your capital will be deducted from your account, right? So yeah, that's what it actually is. You could actually see trading as, to a certain extent, gambling. It's basically gambling. You're basically betting for or against a certain currency pair, right? And we are not fortunate enough to have access to information, right? So most of these institutions are actually able to work together, right, to move price. Because remember, we do not have the necessary capital. There's a huge amount of money that circulates within the financial market within one day, right? I think it's about $4 to $5 trillion that circulates the financial market. That's about 220 billion rands per hour. So you over there trading with your $100,000 account, it's just like a drop in the ocean of what is actually out there circulating each and every day. So you as a retail trader, you cannot move the market. So what you can actually do to put yourself in an advantage from the rest of the retail traders out there is actually to trade with the financial institutions instead of against them. So because most retail traders lose money trading the financial market, it is more advisable to see where retail traders are taking their trades, right? And find a way to actually take advantage of those kind of opportunities, right? So as mentioned before, market is oversaturated. Like, your mentor probably had a mentor who had a mentor, and the information just got diluted down, right? So yeah, so you have to be careful about which trading style you choose to use, right? I feel like I saw a huge improvement in the way that I trade once I started paying attention to liquidity. I started paying attention to order flow and candlesticks, right? And as well as being cognizant of the trading sessions that I use to execute my trades, right? And the days of the week where I choose to actually place my trades, right? So another thing that I'd say has improved my trading is the way I've chosen to how can I say it? The trading probability model that I'm actually using, right? So I was actually having a conversation with a friend of mine, and we were talking about trading probabilities, right? So imagine, right, if there were two boxes, right? You can't see over the boxes and you can't really see what's inside, but in one box there's three Nike Adidas balls and three Adidas balls, right, and two Nike balls, and three Nike balls and two Adidas balls. So if I had to make you choose, right, if I had to come to you and say, if you had to choose, you knew what's inside the boxes, right, but you can actually see, right? So if I say to you, I'd give you 1,000 rand if you choose an Adidas ball out of any box that you choose, right? You can choose any box, right? You're obviously going to choose the box where there's more Adidas balls than there are Nike balls, which is this box, right? So yeah, the probabilities of you choosing a Nike ball, an Adidas ball over a Nike ball are much higher than that of the other box, right? So, and also it doesn't necessarily mean that you're going to choose the Adidas ball. It all comes down to probabilities, right? So as a trader, you never really know the sequencing of your wins and your losses, right? So it's always important, right? This is something that has also helped me like manage my risk more effectively, right? You never know the sequencing of your wins and your losses, so it's important to always keep your risk constant, right? Because you can win the previous trade, and because you just won the previous trade, now you have this overconfidence, and now you're choosing to increase your lot size and stuff like that, and you end up losing the trade. So it's making money in forex trading is not the difficult part. The difficult part is actually keeping the money that you make, right? So yeah, man, there's a lot of retail traders who are actually losing money, right? They actually make money and they lose the money, and they end up blowing their accounts, or they actually end up staying around the same account size level, right? So another thing that I'd like to mention is that you're right, not to like throw shade or hate on anybody, right? Like, yeah, right, if if all of the retail Forex traders had to now go and stop educating other traders and stop using signal services to make money, I feel like most of the retail Forex traders would actually go broke, right? Not to say that, right? It's part of entrepreneurship, I guess. Some people are really good at taking advantage of our opportunities, right? I'm not hating on anybody, right? Yeah, man. I'm just saying, right? So you have to be very careful where you source your trading information from, right? I can easily go and borrow a car or rent a car and take a picture and post it on Instagram just to entice people into, and then start a course just to entice people to take my course, right? And start making money that way, right? But yeah, man, that's just what I'd like to say, right? Just be cognizant, right? Trading is not an easy thing to do, right? It's very difficult. I think it's very important that you are independent, right? You need to be very creative with the way you approach the market and not just source information from other people, right? Because chances are a lot of other people are also using the same methodology that you're using to execute your trades, right? And we know that when a lot of people are using the same method of trading, it's less valuable because chances are you're going to be placed around the same price level and your stops are going to be placed around the same price level, so you're just going to provide liquidity to the market, right? And remember that the institutions are very intelligent, right? They have the necessary resources and things of that nature, and you, unfortunately, you're already at a disadvantage. Okay, so it's important that you use institutionalized methods of trading, right? That's going to improve the way that you look at the market and probably improve your win rates overall, right? So yes, the foreign exchange market is real, right? It comprises of financial institutions, corporations, hedge funds, and brokerage firms, and us, who are the low-hanging fruits, right? We're at the bottom of the food chain, right? We are the retail traders, right? So it's very important that you manage your emotions, right? Psychology is super important in trading. If you take a loss and when you think now you're going to go back into the market because you think you're John Cena, you're gonna get obliterated, right? So managing your emotions and your psychology is super important, right? And you have to be extremely disciplined, right? If you have a certain plan and it tells you to stop trading after a certain amount of trades, you got to do that. Otherwise, you eating away at your edge within the financial markets. That's why it's so important to have an edge within the financial markets. You backtest, you journal your trades and stuff like that, and continuously improving, right? And it's also very important that whatever trading methodology that you're using, it's constantly evolving because the markets are also evolving, right? Remember, so the methodology that you're using now needs to have longevity, right? Because you cannot just hop from one trading strategy to another and another because you're going to go in circles and you're just going to end up, you're going to end up on the other side, on the 90% of the people actually lose or don't make money trading the financial markets, guys. I think we've covered everything. We've covered EBS, the electronic brokering system, the interbank market. We've covered derivatives, we covered futures, we covered CFDs, we've covered the fact that trading is to some sort of an extent for us retail traders gambling because we are not the actual people who move the market. The people who move the market are the people who actually have the financial capital to actually move the market, right? So yeah, man, I hope that this video was insightful. I hope that you took something away from it. And from me, Vanquish 33, yeah, man, this is just me signing out. Make sure that you like, comment, subscribe. Make sure that you share with someone who's actually trading. Maybe they might find this information valuable. And yeah, man, in the meantime and in between time, rock with your boy.